when it comes to relief for consumers and businesses, the banking sector has highlighted the contribution it has made due to the lockdown and COVID-19. The Banking Association South Africa says banks have been able to provide a cumulative 47 billion rand in relief for those vulnerable companies and individuals. It briefed the Portfolio Committee on Small Business Development in Parliament today. To discuss, we're joined by the MD of the Banking Association South Africa, and that's Bongiwe Kunene. Ms. Kunene, thank you for being with us. We were talking about this recently. Just tell me more about what you told Parliament about how the banks have been active and stepping in.
Thank you very much, Francis. What we discussed today were a set of numbers and initiatives that the banks have been involved in helping their customers. The number that we presented was 46.22 billion. So out of that 46.22 billion, an amount of 19.45 went to households and individuals. Then another amount of 13.39 went to businesses under the loan guarantee scheme that is in partnership between the banks, National Treasury and the Reserve Bank. Another 13.38 billion went to small businesses as well.
Can you put this into context for us? 47 billion or thereabouts. I don't know how much was given in relief during the financial crisis, for example. Would you say this is massive?
No, it's not massive. This is proportionate to the number of applications that the banks received. The businesses that applied for relief were just over 40,000. And those that had applied and got supported immediately were 25%. Because of the terms and conditions that were not met and some of the documentation that was not available, there is a further 39% of the applications that is still being processed. But in this also, Francis, there's another number which is rejected and those which were declined. Now, the rejected ones is only 9%. Those are the ones who do not qualify at all. Whereas those which were declined, there are several reasons for those declines.
All right. I'd like to talk about that, but more importantly, there's been huge concern about the government-backed loan scheme. So the idea is that businesses will lend out, government will back most of those loans, and it has seemed like it's been a complete failure because nobody's been picking that up. I think you did say last time that that's also based on demand. Many businesses don't want to take on more debt, and also the rules were a bit onerous. Has there been any movement since there's been a change in the rules around that loan scheme?
Certainly. So starting on July 27th, the rules have been relaxed. Previously, the guidance note on who is the client that most qualify was that you must have been a good client at the beginning of COVID. That now has been moved to the end of 2019. The other relaxation comes to the amount that the businesses can apply for. Instead of looking at the cap on turnover, now there is a limit on the number, the amount. So you can apply up to 100 million, which gives a lot of room for businesses to apply as they deem necessary. The other issue, Francis, was the documentation. A lot was required from the applications. Now the banks have been given leeway to be more relaxed on the documentation. This in particular refers to the annual financial statements that were not audited. Now, as long as you are a client of a particular bank and they've got your documentation in the past, they can use that. But maybe on top of all of that, the other big point that has been relaxed has just been what the loan can be used for. Previously, the loan could only be used to pay for salaries, to pay the suppliers to the company, and also to pay for running costs like the lights and rentals. Now the businesses have been given more room to look at what the business actually needs apart from these three, and they can use the proceeds of the loan for that.
All right, Ms. Kunene, we've run out of time. Thank you for that explanation. I understand it hasn't moved much, but we'll follow that. Finally, Standard Bank, ABSA, releasing their results. And I know you can't talk about specific banks, but the bad debts are piling up. Are you concerned as the association, or are you looking ahead to a recovery? I mean, even the investors pushing up ABSA's share price yesterday may be thinking that this too will pass.
Yes. As coming into COVID, South African banks, all of them, were well capitalized. So what you have seen in the results that come out now is that there's been a huge push on the numbers for provisioning. But the banks are also looking forward to an economic recovery, and they all intend to be participants and creditors of the economy. Therefore, we should not be too concerned about the current numbers. We all realize they're not good numbers. However, we are looking at scenarios of how to push and help carry the economy forward.
All right. Thank you very much for your time tonight. That was the MD of the Banking Association South Africa, Bongiwe Kunene.